What is up, ladies and gentlemen, boys and girls, agents, loan officers, home buyers, family, friends, enemies? Welcome to the Monday Market Update. My name is Sean Grapevine, VP of Product Strategy here at UMortgage. Excited to kick off another week, a big week in the markets, and a big week with my buddy, Matt, the mortgage guy, Gougé. Welcome, Matt.
Hey, how's it going, Sean? I'm excited as well for some talk about some things that could move the market because people are concerned, man. Rates have been going up, and the funny part is I just looked at it. Rates are like a full % lower than they were this exact time last year. So we'll talk about rate trajectory and the different things that affect it. I know you got all the, things that are calendared for this week that can affect mortgage interest rates. So excited about it, brother.
Yeah, it really goes to your point about people don't care about the rate. They care about what the rate was a month ago compared to what it is right now. That's like maybe like 2 months is sort of the window. It's like, it's the direction they're moving that people care about, not necessarily what they are right now.
Exactly.
So yeah, there's definitely some consternation, but there are some people out there that think we as an industry are going to grow despite rate, some bumpiness, some gently rolling hills in the landscape of the market. But before we get into the boring stuff, Matt, what'd you do this weekend, buddy?
This weekend was a pretty quiet weekend. We didn't have a lot on the calendar, so we got to take the weekend at a leisurely pace. And Saturday we went and played some miniature golf. We went.
I love miniature golf. So much better than regular golf.
You know what my problem is, and this might sound like I've got an ego or something, is they don't have a chance against me, and I can't just throw it away and let the family win. So like I said before we went, I was like, nobody's got a shot. Name your number, I'll pay you if anybody beats me. And it was about 6 or 7 holes in where I had such a lead that I couldn't lose if I tried. So sorry to my wife and my 2 boys, but yeah, I enjoy me some mini golf, and it was beautiful. It's like 70 degrees in Sacramento this time of year. So yeah, some mini golf, a family dinner. Yesterday was a chill day with a little last fall ball baseball game for my younger kiddo, and then watching some football, watching the Niners beat up on the Dallas Cowboys. So for sure, I'm gonna throw a couple spears at Jay Bunty and Tyler Hodgson, all our Texas people at UMortgage today, because their Cowboys look dismal this year.
I love it. I love that for them. It's couldn't happen to a better fan base.
Honestly. Yeah. What about you, man? Watching bike races on TV or something this weekend?
No, cycling season's all but done, unfortunately. I did watch the Falcons beat up on the Bucks, the Tampa Bay Bucks, and I ran a half marathon personal best today.
Look at you
on Saturday.
Sweet.
Yeah, I got up in the middle of the night, the night before, and tried to make my way to my bathroom and stubbed my toe so badly on my dog's crate. It is like dark purple. It doesn't bend. And then I just I was like, oh, well, I'm going to run this half marathon anyway.
Wow. And good for you. Don't let nothing get in the way.
I'll send you some feet pics later. They're gross. So, all right. Well, enough about feet
Feet
picks.
picks.
As usual, let's get into some equally dirty screenshots here and talk about what we expect is going to happen on November 7th. That's the next Fed meeting. So, not next week, but the week after. The Fed will wait.
Next Thursday. Yeah, week from Halloween.
No. It's
Is that not right?
Oh yeah, you're absolutely right. Oh my gosh,
The days fly by, buddy.
Yeah, we'll have even more clarity going into next Monday, especially after this crazy week of data. But you'll see here, this is the implied odds of what the rates will be based on bond trader activity. You'll see here, this is where we're currently at, the 475 to 500 range on the Fed funds rate. And very, very low chance that there will be no change. 98.3% chance. And that's totally different from last week, right? It was a 14% chance there was no change last week. And then a month ago, there was a 46.7% chance that there would be no change. So, no, there's a 0% chance. I knew that didn't sound right. But anyway, there's a 13.5% chance of no change last week. And you and I kind of marveled at that. But it seems like despite rates continuing to go up, the expectation from traders is that on Thursday of next. Am I losing my mind? On Thursday of next week, we will get confirmation from the Fed. They're dropping rates another quarter point. The question is, what are they going to do after that? About 28.7% of people, or there is a 28.7% chance anyway, according to the market, they will leave it steady after that, and still a 70% chance that they will reduce rates one more time in 2024, giving us 4 total rate cuts over 3 different meetings, and that we will be. If you look back at the very beginning of the year, a little higher than we thought. And if you look at kind of the middle of the year, a little lower than we thought. And then if you look, it's like, looking to be in a healthy place where if you would have taken all of the guesses over the last 10 months and squished them together, then you might say 4 rate reductions.
4 lands in the middle. Yeah. Like,
and that's
a
like,
year ago, it was like, there's going to be 6 cuts. And then we got to a place where it's like only 3, only 2. And so, 4.
But then we had that one little moment like 6 weeks ago where it was like, no, there's going to be like 10. Like this, you can actually see on the March graph here, there's a sort of the remnants of all of the other guesses that could have happened for March, where like if you look, there were even people saying it would be 275 to 300 come March. Right now, there was 1.8% chance, but still, like it was on the table, and there's a 36% chance that there would be an 8th rate cut. But if you look here, there's a pretty good chance that we'll get down to maybe like a 4th or a 5th one, or a 5th or a 6th one here, but not too much lower than that. So expectations certainly tempered compared to where they were mid to late August, but overall, kind of right where we would have expected if you would have asked a sane person in January, February, March, April, May of this year. So all in all, a not bad news for rates. And the Mortgage Bankers Association and various other industry units are forecasting they're starting to make their 2025 forecasts. And again, very conservative, tempered, but optimistic outlooks. They look for a $2.3 trillion origination volume for 2025, which is about a 30% growth over this year. And this year, I wouldn't say has been like an unhealthy year in the mortgage market. It's been certainly slightly constricted, but would you say this is like, would you say this was a tough year in the mortgage market, an average year, below average, healthy?
Yeah, it was probably borders on the tough line. If you talk to most people in the industry, you shouldn't be comparing volume stuff to 20 and 21 because that's silly, even though quite honestly, a lot of us do it. But I think for most people I talk to, and if you have a huge company like UWM and all the data that they have, there was a 30-month period, over the last half of 22, all of 23 and 24, relatively, constricted loan volume on purchase and refi. And so it makes sense that, we can kind of only go up from here. And we know so much about how interest rates affect demand. So if interest rates come down, the Fed continues to cut, and every, buddy's kind of predictions come true that, it doesn't have to go down a ton, but comes down a little bit. There's going to be a lot more purchase business happening. There's going to be more refinance business happening. And so, 25 and 26, if you project, should be a lot more robust markets than 23 and 24, which is a good sign. And, it's interesting. I was thinking about this, Sean. I'll share it before I forget it. As many people that are just like, housing's broken, there's no sales happening and all that. Like, you can look at builders and builders' confidence as kind of like an indicator. There's a lot of building going on. They know that we need more units, and they know that there's a lot of like held back demand. If you talk to any broker like myself, I'm like, yeah, I got 90 or 100 people that are going to buy sometime. And, the all-time highs for 25 to 30-year-olds living at home, they're not going to live there forever. When you're 34 living on mom's couch, like, you want to go out there and buy a house. And maybe that's the place so you can save the money for the down payment. But whatever the case, like, I think that we shouldn't have crazy expectations about, 4 trillion in originations like we did, in some of the boom years, but definitely stronger and more action than this year.
Sure. I mean, and if you look at, like, I'm looking back at the quarter that ended June 30th of this year, the industry did $429 billion in business. And then if I look back to like the last normal year, I can remember 2019, it did $508 billion. So, about 14% off of 2019's quarter that ended June 30th. If I look back at quarter that ended June 30th in 2018, 461. 2017, 467. So yeah, I mean, and those were not, they were definitely not like these crazy years by any means, but you and me and all of our friends had, we were crushing it. So
right, yeah,
but I mean, the other issue is that houses cost on average probably 40% more than maybe 60% more than they did in 2017. So there's a lot fewer transactions now to get to that same number.
True.
So anyway, the market though is forecasted to grow by many different organizations, institutions, economic studiers as they are called, and we'll find out more about that this week. This week is a big week in economic news. I'm curious to hear which one you're most excited about, or maybe, I don't know, maybe I'm the only person who's like nerdy enough to get excited about those, but let's go over what's coming out. So we've got the Case-Shiller Home Price Index, which measures the top 20 cities in the United States and the change in home prices over the preceding year. Last quarter was, or actually it goes by month. No, it does go by quarter. Last quarter was an increase of 5.9%. In price over the preceding year. So we'll see if that continues to go up. We got consumer confidence ratings. We've got number of job openings. So that measures sort of, it's an interesting measure. It kind of measures how it measures two things: how confident employers are, right, to have job openings. You have to be confident that you can pay them. And then also, if there are a lot of job openings, it can also indicate that people are well employed. If those job openings stay open for a long time because they don't want to move to these new jobs. So that's all tomorrow. Literally nothing today. They're giving us some time to catch our breaths and get ready. On Wednesday, we've got ADP, the country's largest payroll provider, probably the world's largest payroll provider, giving us what their number of new jobs created. That number is at 113. Last month was at 143. So a tempered estimate there. We've got Q3 GDP coming out. Expectation is 3.2%. Last quarter was 3%. We've got pending home sales, and it's kind of bland by comparison with the rest of these. We've got personal income, personal spending, PCE, which is a measure of inflation that the Fed uses, core PCE, which is that same measure with energy and transportation stripped out, initial jobless claims, and then we've got the actual unemployment or employment report that should show us how many jobs were created in October. Crazily enough, the estimate is at 110,000, which would be incredibly low. And also, I feel like gives a lot of room for a massive overshoot again, where like only 170,000 are created, but like it's 60,000 more than were expected, and rates go up again.
Right. Yeah. And that's the tricky part about all this data. If people are wondering, like, why are we worried about economic data? Isn't this mortgage and real estate, related discussion? This is what drives mortgage interest rates. And so when you go through all of those, and I think about like what the Fed's talked about and what their plans are, I think PCE holds less weight than it did for the past. And now it's like, we got inflation under control. Now we're more worried about stable employment. And so I'm personally like that ADP report that, I think it's projected, you said 113. That I think is going to be potentially a market mover depending on how that comes in. And I think if I heard correctly, I was listening to something, there could be revisions, but they don't necessarily have to do revisions for another couple months to square it up for the year. But I think, was that the report last month where they there were seasonal jobs and there was something that kind of could have messed with the numbers? So many of these numbers, man, I just find it hard to really rely on them too heavily.
Yeah. The only thing you can rely on is that they are relied on by people. So, it's like the fact the numbers themselves only mean something if they mean something to somebody else, and they clearly mean something to,
the Fed.
Yeah. and policymakers, et cetera. So, I'm kind of with you. It's like, I don't know whether to trust these numbers, but I do trust that they matter. So should be interesting.
Right. Whether we agree with them and that they're accurate or not, that doesn't matter. What matters is, economic policy and things that the Fed does will be affected by what these numbers say.
Well, we have another pretty big market mover coming up next week, which we can talk about on Monday because it happens on Tuesday. Any guesses on what that one is?
Let me take a guess. I probably don't know, but November 5th. I do know. Hey, I mail in my. Look at this. In case you guys were wondering. Get out and vote. Rock the vote.
Unfortunately, my entrance into the presidential race was not on time to make the California ballot, but as far as I know, you can write me in. So I appreciate the vote of confidence, Matt.
Yeah. So what's funny? That's a good thing. Because I know on this channel we're not going to talk politics, but part of this sideline demand is, you don't even have to call it the election. You can just call it anything that people are uncertain about. Sure. So uncertainty in general causes people to say you know what, let's press pause. And I think it will be surprising how many people start to trickle back into the housing market, buyers especially, after the election, just because
no matter what happens,
a decision's been made. There's no more uncertainty. Okay. And maybe it's some people that are listing homes and moving and doing stuff like that too. So I think that it's a positive for the housing market, no matter who gets elected, because it's just
Matt, that's honestly it's sad to say this. That's the most uplifting, thing I've heard about the presidential election in months.
Yeah. Well,
Matt says, I don't care who wins. I just want both sides to have a great time.
Yeah. Well, the funny part is you got to be in the right circles, Sean, if you haven't heard positivity around the election, because the honest truth is you, Sean Grapevine, are the number one factor in Sean Grapevine's economy, right? You've got the most influence over that, not who's in the White House. And so, yeah, enough.
Especially if I get elected president.
Right. Yeah. And so, yeah, it'll be interesting, man. All this data, the election being behind us, if rates come down, and that, always we know creates some more demand and some more action, we could be in for a pretty busy winter. There's no way that this winter is as slow as last winter, because you look at
it would be impossible.
Yeah, 8% interest rates and whatnot, and so yeah, that's all positive stuff, brother.
Yeah, last winter was the slowest quarter since March, the first quarter of 2014. So
wow.
Yeah, and again, that's not inflation adjusted, obviously.
Yeah.
So,
well, let me ask you. I don't know if you have these numbers, Sean, but I know we're going to talk about like 2000.
I'm ready. I got screens everywhere.
So 2.3 trillion in originations for 2025. Do you have any idea what the number of like real estate transactions is? Because we got to a point where year over year that went sub 4 million. It was like 3.8 million. I wonder what the year of 2025 as a whole for total real estate transactions. I know in the booms we got above 6 million. I think 4.5 to 5 is probably closer to average, and 3.8 million.
I don't see a breakdown between refinances and purchases. They're expecting 6.5 million loans. So, I would expect not more than 30% of those as refis. Right? No, there's no way. Right? Because think about it depends on rates. It's like this number is going to change. Really, this number is built on what happens with rates, because refis will be the driving factor in units, right? Like 6.5% versus 5.5%. Is that going to move the number of loans done like in a huge fashion for purchases? Yeah, maybe by like 10 or 20%, but it's going to
refi.
Yeah, it's going to quintuple refis if it's 5.5 instead. But if it was a 30% refis and we did 6.5 million units, we'd be at 4.5 million purchases. Not bad.
Yeah. That I think 4 to 4.5 million purchases, and also I guess factored into that purchase number is 17%, 20% cash, right? So like only X number of those have a loan tied to them, and so that every indicator I look at, man, 2025, there's going to be more action. If you're a buyer and you're thinking about whether you buy this quarter, you buy in 25, you buy in 26, I'm telling you, it is concession season right now, Sean. Go up there.
Is that what you're saying?
Concession season, dude. Like, go buy something in the next couple months. Don't wait for everyone to come back in 25 and rates to be lower and there to be more competition. Go out there and get yourself $15,000 in seller credit. That's what my buyers are doing.
Yeah, I would love that. Yeah, we're thinking about having a kid, so we're thinking about buying a house soon as well. Here in beautiful Smyrna, we got a 3-2, but one of those 3 is this room,
right?
And my wife's a musician, so the other one is her studio. So the kids just got to sleep on the couch or something, unless we get a new house.
Yeah. Well, go get yourself.
But I feel confident going into a buying. If we were to go buy a house, it's probably a little early yet for us. But like if we were to buy a house, like the only reason we're not now is other timing issues. Like as far as the market goes, I would be pretty stoked to go out in the market right now and like swing my pre-approval around and be like this. This is gonna get me far. People want me to offer on their house. It's
There's it is specific to markets, but being in as many markets as I am, I see similarities where I'm like, yeah, stuff is sitting for longer. Sellers are willing to negotiate, that's where you want to be as a buyer. Team buy side, you want this market right now.
100%. Rates aren't too bad. Plenty of inventory and not a ton of buyers. I mean, it's definitely the time to strike. So, I'm excited to answer my own question. I'm excited the most for I guess the employment report on Friday. I think it's going to be so interesting. I mean, they just like forecasters can't get it right. And it's kind of a win-win. If it comes in low, rates go down. It's great. If it comes in high, then supposedly people got more jobs, which I'm really happy for those extra.
Are you which one are you happier about though, Sean? The more jobs or the lower rates? You can be honest. We're friends. His pause meant that he wants rates to go lower.
No, the more jobs, the more jobs. I mean, for me, I'm a higher, longer kind of guy. Like my value to a customer, our value at UMortgage to somebody is so much higher and so much more important when like it allows us to differentiate ourselves a lot more when there are questions in the market. Like who really had that much value when rates were 2.5%? I mean, gosh, that was like, it was boring, right? It's like shooting fish in a barrel, ducks in a barrel.
Yeah, it was
Whatever you wanted. You put whatever you want in that barrel.
Right.
So, you know, I like it. I think it allows great companies and great people to succeed, and for us to continue to transform the mortgage industry into a advisory based relationship than a transactional based relationship. You know what I mean?
I agree 100%. It's like, you know, the more complex the issue, the more vital it is you have somebody who, you know, understands more than just the script that they're reading from the call center cubicle they are calling from.
100%. No offense to our call center cubicle brethren. Come to UMortgage and learn what it's like to live the relationships, not transactions lifestyle.
Yeah, I mean, it's really easy if you're a buyer. You just go to greatmortgagebroker.com. You connect with Matt and the team. You're all set.
There we go. Love it. It's in the chat. Matt, I think for the first time ever, we're going to end this this little podcast. It's just too anticipatory. There's nothing like, there's no analysis. I just want the week to happen.
Next week is going to be fun. Next week, stay tuned for all this week's numbers.
Yeah, it's going to go. We're going to save you 2 minutes today. And we're going to go 20 minutes long next week. So
yeah, for sure. I'm with it.
Come with your questions. Watch the news. Read the newspaper. Hop on the front page of the Wall Street Journal. Come with your questions for us, and we will do our best to answer them as the data unfolds. Maddie, hope you have a great week, buddy.
You too, Sean. Have a good week, buddy.
Thanks, everybody.
Bye-bye.